Hi everyone, it's Sabrina. I recently made a video on TikTok and I had a couple people ask me, well, what is the benefits of having a 620? Because I heard you can get, a home loan with a credit score of 500 or 550, 580, all of these different numbers were floating around. And the point I was trying to make is if there's an opportunity that comes up, of course you would take it at whatever credit score you're at. But you know when you're ready to buy, when your credit score is already where you want it to be. And so you're getting the pick of the litter when it comes to loan and interest rates and getting to choose the type of loan that you want that's most beneficial for you and your family. So just a few things I wanted to cover real quick. So your credit score, I say above a 620 because it opens you up to more options for loans. And there are certain loans where if your credit score is too low, you're not eligible for certain things like down payment assistance. If down payment assistance is an option for you and you plan on buying a home and living in it for at least 2 years, you want to go ahead and take that free money that's there. But there are conditions like living in the home for 2 years, and some of the loans have to be covered under FHA to make sure that you're getting a solid home and not like a fixer upper or an investor trying to flip a home or something like that. So 620 is bare minimum of where you want to be to make sure that you're eligible for all of the things that are available to you. Also, having a higher credit score allows you to have a higher debt to income ratio. It just allows them to be a little bit more flexible and you're not as high of a risk of a loan. And that's how companies rate you whenever they're considering you for a loan for a home. Is this person high risk or are they low risk? And a part of that has to do with how much money you have in your savings, your credit score, and how you're paying off your debt that you do currently owe. So a big thing right now, right? The student loans just got delayed again, right? And that's great that they're getting deferred over and over again. But it's a perfect time to still make payments on those loans without having to pay any interest at all. So something that really helps is yes, everybody understands student loans and there are things you can do. You can reach out to whoever is holding your student loans and tell them like, hey, I'm trying to buy a home. I need to reduce this monthly payment. How far can you stretch it out? They can stretch it out up to 999 months. So it just depends on your loan servicer that you have and whether they're going to be that flexible with you, but that is an option that they can extend it out further to reduce your monthly payment so that you can get the home. Because if you have high monthly payments due, you have less money available to get a home. And so even if you do get pre-approved with a 620 or higher credit score, but you have a high debt ratio, they'll reduce how much home you can purchase because they know that you still have lots and lots of payments to make on those student loans. So the best thing to do is start paying little chunks as you get them. If you work a little overtime or you receive a raise and you're still living off of your old paycheck and keeping the extra money to the side, use that to pay down extra debt, pay extra on your car note, pay extra on your student loans, and then also pay down hospital debt, right? Like that's a realistic thing, and lenders are reasonable because they understand that a lot of people still have medical debt, whether they have insurance or not, depending on what they have going on in their personal life. But at the same time, you want to show that you've been paying it down, that the debt has been reduced. Because when they look over a span of time, if the debt is the same from the time that the loans were originally deferred, a year ago, 2 years ago, 3 years ago, and they're still at that same amount due now, it's going to show like you're not making much of an effort to pay down your old debt. And that lender does not want to become your old debt. So 620 credit score, pay down large lump sums of debt, and then also not making any new large purchases. As you're preparing to buy a home, that lender wants to know that this isn't something that you're doing on a whim, right? They're going to check your history, your payments, what you've been buying, any new accounts that you've opened, any spending that you've done recently. They're going to go back and look at those things. And if recently you bought a new car, you've opened up a credit card and a store credit card and all kinds of other things that you're making, large purchases, of course, they want to see your bank statements. How are you spending your money, or have you been saving? Have you been preparing for this? that's what makes your loan less of a risk. So you want to have more and more and more and more debt paid down over time. And if you're just starting out, there's no rush. Homes are going to be here forever. They're the only rush for people is if they're trying to snag a good deal at the end of the year. And it's just like car buying. Homes are the new construction homes specifically, but a lot of them want to get those homes off their inventory at the end of the year. So of course they're marking the prices down, and we just had one last week down from 362 to 314 and snatched it up really, really quickly. So these are the things that are going to be available to you, but you want to make sure that you're in position first. Another thing is having savings. If you have with your job an option to have a 401k, get the 401k. Even if you're just putting a little bit in it, or if you're only doing the amount that they match, whatever the amount is better, because whenever you have a 401k, some type of retirement plan, the lenders are able to see that you have something set up for the future and you're not just living out of your checking account. It shows that you're putting forth effort into saving for a future and to having things in the future. These are the kind of things that set you up to be able to get a better interest rate and to show that you're ready to buy so you don't miss out on a deal. Another thing is, the USDA loan. So if you're in DFW area, which is where I'm at, the further out you go from the city, the more eligible you are for USDA loans, which are rural loans. And my first home was purchased with a USDA loan, and I'm about 25 minutes from downtown. Now, as these areas fill out and more people move in and they're getting filled very, very quickly, as they fill up, that area is no longer eligible for USDA and they move out even further. And so because they're moving those areas out further, you may end up living further away from the city. But if you work from home or you work in the evening so you don't really see traffic, or you have some flexibility with your schedule and how you can get to and from work, utilizing one of those loans can help you so much. Lower interest rate, and you bring way less to closing. So my first house I purchased was 108,000, and I know that was a different time, but $108,000, and I put $500 down for them to start building that house, and then I came to closing with $1,800. And I know $108,000 isn't realistic for home buying today, but for 250,000 or for 300,000, even tripling that, you're at $3,600 coming to closing. And a lot of those things you're not eligible for if you have high debt ratios. If you have a lot of debt, you're no longer eligible for the USDA. And if your credit score is too low, you're not eligible for USDA. So I know there's tons of things that are floating around the internet. And yes, you can buy homes with really low credit scores, but you're going to have high interest rates. So you're going to have a high monthly payment. And you want to get it as low as you possibly can. You can also absolutely 100% refinance after you've been in the home, but you want to set yourself up to have a really strong, solid first year in your home. And doing that will stop you from having to keep digging into your emergency fund, digging into your savings, and it won't leave you house poor. If you set yourself up, and 620 credit score is like the baseline, like the bottom of what you really want. You are eligible to purchase a home below that, but if you can get over a 620, go for that. And there's little things that you can do, and I'll go over some of that stuff on another video. I don't want to make these too long. I just want to, be able to provide a little bit of quick information for people. But you just want to try to use that as your baseline. 620 credit score. You want to have, I'm going to say, $8,000 to $15,000 saved. Now, $8,000 to $15,000 right now at the end of the year may not actually be required, because the new construction builders are giving you down payment money, closing cost money, paying for the title, paying for the surveys, paying for whatever is needed to get going, and you're not having to pay those fees right now. And so I do have clients that are closing with $3,600, and they put down their initial 3.5%, but then their closing costs were only $3,600. And you are able to get sellers right now to cover a portion of your fees. But right now, you want to make sure that if something comes up or if the right time to buy for you isn't during a season where the market is in your favor, where sellers are paying or where new construction builders aren't offering those things, you want to have that money saved up and not bank on someone else having it. Because if you don't need it and you are able to move in and you don't need to have that extra money, that's just extra money in your savings, things that can go towards any upgrades you may have wanted to do towards your home or saving for another investment if you were waiting to purchase a car or any other large purchases you have. I don't want to go too far over 10 minutes. I know I have a lot to say, but I'll keep going with my educational sessions and just try to bring more and more and more information to the table and shift some people over from their paycheck wealth into generational wealth and shift all of the people in our family, all of our friends. So invite anyone you know and have them take a look at this and just continue to educate each other on the process of home buying. I'll see you soon.